Superannuation guarantee compliance is one of the Australian Taxation Office's highest audit priorities, and the consequences of getting it wrong have rarely been steeper. Every employer in Australia must pay superannuation of at least 12% of each eligible employee's ordinary time earnings to a compliant fund and on time. Fall behind, even briefly, even unintentionally, and you can be drawn into the superannuation guarantee charge regime, which is considerably more expensive than simply paying the contributions when they were due. In the next few minutes, I'll explain what an SGC audit involves, what triggers one, the penalties at stake, and crucially, how to protect your business, including the major change arriving on the 1st of July 2026. I'm from Australian tax experts, tax lawyers and accountants. Let's frame why this matters with three numbers. The first is 12%, the superannuation guarantee rate that applies from the 1st of July 2025, the final step in the legislated increase. The second is 200%, the maximum Part 7 penalty the ATO can impose on top of the superannuation guarantee charge itself. And the third is the word nil, because unlike ordinary super contributions, the superannuation guarantee charge is not tax deductible. Put those three together and a picture emerges. Super is not an area where falling behind is a minor cash flow timing issue. It is an area where a modest slip can become a large, non-deductible liability with penalties on top. That's why it rewards getting right. So what exactly is the superannuation guarantee charge? It's the charge the ATO imposes when an employer fails to pay the required super to eligible employees by the quarterly due dates. And here's what makes it bite. It's calculated on a different, broader base than ordinary super. Where ordinary super is paid on ordinary time earnings, the charge is calculated on a wider base, salary and wages, and it adds a nominal interest component of 10% per annum on the shortfall. On top of that sits an administration component of $20 per employee per quarter, and the potential for Part 7 penalties of up to 200% of the charge. The practical effect is striking. A seemingly modest shortfall can generate a liability of around 3 times the original amount. And because the charge is not tax deductible, falling into this regime is far more expensive than simply paying on time. It is worth pausing on that broader base, because it surprises many employers. The charge is not simply the super you missed. It is recalculated in a way that can exceed the contribution you would originally have made. Let me show you how that multiplication happens, step by step. You start with the shortfall itself, the super you should have paid, now recalculated on the broader charge base. To that, add the nominal interest component of 10% per annum, accruing on the shortfall. Then add the administration component, $20 for every affected employee every quarter. And finally, the big one, Part 7 penalties of up to 200% of the charge. Stack those together and the total can reach as much as 3 times what you originally owed. And remember, none of the superannuation guarantee charge is tax deductible. When you see it laid out like this, the lesson is obvious. Paying super accurately and on time is almost always far cheaper than the alternative. How does the ATO decide whom to audit? There are 3 especially common triggers. The first, and one of the most frequent, is an employee tip-off. An employee who notices their super hasn't been paid, or has been paid late or short, can report it directly to the ATO, and they do. The second is data matching. Through single-touch payroll, employers report payroll to the ATO in real time, which gives the ATO unprecedented visibility, and lets it flag any employer whose reported wages don't line up with the super actually paid. The third is industry campaigns. The ATO periodically targets specific sectors, hospitality, cleaning, security, construction among them, for intensive compliance checking. If you operate in one of those sectors, assume you're on the radar. If you are selected, what does the process look like? It typically begins with a letter the ATO advising that it's reviewing your superannuation guarantee compliance? Don't underestimate that letter. It needs a careful, professional response. The ATO will then request records, your payroll records, your superfund payment records, and employment contracts for the relevant period. Its auditors reconcile your payroll against your super payments to identify any periods where contributions were late, short, or simply not paid. And once that's complete, the ATO issues a position paper, setting out the assessed charge and any proposed penalties. Importantly, you have an opportunity to respond before the assessment is finalized. That window is where specialist representation can make a very real difference to the outcome. A common and costly mistake is to treat that first letter as routine correspondence and reply informally. In reality, it sets the tone for the entire audit, and what you say and do not say early on can shape the position the ATO ultimately takes. Let's talk about those Part 7 penalties, because this is where the numbers can look frightening and where good advice changes everything. Under the Superannuation Guarantee Administration Act, Part 7 penalties can be imposed at up to 200% of the assessed charge. But that headline figure is rarely the final word. In practice, the ATO frequently remits, that is, reduces, a portion of these penalties, particularly where the employer has cooperated fully with the audit and has no history of non-compliance. The key to a good remission outcome is a well-prepared submission, one that clearly documents the employer's good faith conduct, any mitigating circumstances, and full compliance with the ATO's cooperation requirements. This is specialist work. How the submission is framed materially affects the result. And the single strongest factor of all is making a voluntary disclosure before the audit begins. Let me give you a real example of what specialist representation can achieve. In a matter handled by our office, a well-known Sydney franchise business was assessed with Part 7 penalties of 200% of the superannuation guarantee charge. In recognition of the employer's voluntary disclosure, the ATO had already remitted the first 100%. We then argued for full remission of the remaining 100%, and the ATO agreed. The penalty went from 200% to nil. That outcome wasn't luck. It was the product of a carefully prepared submission and a disclosure made on the right terms. It's exactly the kind of result that early, specialist engagement makes possible. Now to the change every employer needs on their radar, because it is imminent. From the 1st of July 2026, the way you pay super changes fundamentally. Until then, super is paid quarterly, by the 28th day after each quarter. From that date, under what's called Payday Super, you must pay superannuation at the same time as salary and wages, on every payday, and the contributions must reach the employee's fund within 7 business days of pay. Super will also be calculated on a broader, qualifying earnings base. The effect is profound. The window in which a shortfall can occur shrinks from a quarter to just days, and the superannuation guarantee charge will apply if super is late by payday. In practical terms, that makes real-time payroll accuracy essential. Reviewing and upgrading your payroll and super processes before the 1st of July 2026 is now an urgent priority, and a central part of managing your audit risk from here on. If your payroll software, your pay cycles, and your default superfund arrangements are not ready for that shift, the time to fix them is now, not in July. A few weeks of preparation can save you from being non-compliant from day one. So how do you stay on the right side of all this? Prevention, as ever, is far cheaper than a cure. Make sure your super is calculated correctly, paid on time, and properly documented. And review your payroll processes regularly, rather than assuming they're sound. Make sure every eligible worker is captured in your calculations. And remember that many contractors are deemed employees for super purposes. Pay by the due dates without exception, and from the 1st of July 2026, every payday. And if your business has historic issues, late payments, underpayments, or workers who may have been wrongly excluded, address them through a voluntary disclosure before the ATO initiates an audit. A disclosure made before the ATO opens an inquiry is the most powerful tool you have to limit penalties. The worst option is always to wait and hope. This is precisely the work we do at Australian Tax Experts. As both tax lawyers and accountants, we defend employers through superannuation guarantee audits from beginning to end, responding to the ATO, reconciling the records, and protecting your position at every step. We prepare the Part 7 remission submissions that reduce and very often eliminate the penalties, and we frame voluntary disclosures with great care so that they limit your exposure rather than inadvertently opening up new issues or additional years. That combination, the legal argument and the accounting, under one roof, is what allows us to achieve the outcomes we do. When the ATO is looking at your super, you want that depth on your side of the table. We also help employers get ahead of problems entirely, reviewing payroll and super processes, testing whether contractors are correctly classified, and putting the documentation in place that makes any future ATO contact far easier to deal with. So let me leave you with this. If you've paid super late, short, or you're not certain every eligible worker has been captured, if you've received an ATO letter about your superannuation guarantee compliance, if you're considering a voluntary disclosure and want it done on the right terms, or if you simply need to be ready for Payday Super from the 1st of July 2026, now is the time to act. Contact Australian Tax Experts for a confidential review of your position before the ATO contacts you. The sooner you act, the more we can do. Visit australiantaxexperts.com.au. Australian Tax Experts, tax lawyers and accountants. Thank you for watching.